Okay, Jonathan Schiessl then joins us on the phone line. Jonathan, hi, afternoon, and we understand you've been grappling with your Skype connection for a while. Well, what's going on, Jonathan, with the market? Because it seems that the market as well are grappling with daily corrections, daily volatility. Seems like this is the new normal and new reality. We have to know how to deal with volatility, which seems to be creeping in from the start of the year to now.
Yeah, no, you're absolutely right. I think we got too used to a low volatility period. Clearly the data, the fringes is causing worry, obviously the politics as well. And obviously with this, everybody's impatience with the earnings recovery coming through, then clearly there are some negative elements that have crept in, which are causing volatility.
Yeah, that seems to be the case. Where is India, though, within the pack, Jonathan? Because time and again, irrespective of the recovery that plays out for U.S. equities, we don't seem to be tracking that. But the days that U.S. market falls hard, it sure impacts our own. What's the India view? Because, again, we are grappling with our own domestic issues as well. You've got the recent bout of state elections wherein, it's only throwing up some uncertainty for the 2019 elections. And we too are dealing with a high interest rate scenario / bond volatility.
Yeah, absolutely. So, yeah, the global backdrop is clearly becoming more difficult. Whilst certainly we think the macro outlook from a global perspective is still quite strong, we're still, as far as we're concerned, relatively early cycle from a global macro perspective, early cycle recovery. Clearly what's going on is politics is taking center stage. Whilst earnings are still looking reasonably okay, valuations are certainly not pricing in this new uncertainty being created from a political perspective, particularly from the US. And obviously there's worries over inflation on the one hand, and obviously, government trade policies or protectionism on the rise as well globally, which seems to be gaining strength, unfortunately, at the moment. So, are equity markets pricing that in? Certainly not. And then on top of all that, you've obviously got a market leadership sector like technology in the US, which is also coming under increased pressure, obviously with the revelations over the last few days with Facebook. And certainly when the leadership stocks start coming under pressure, that clearly is hurting as well.
I haven't heard you this bearish for a long time. So are you indicating to our viewers that the downside for this market is still open?
No, I mean, obviously from a global perspective, as I said, I think the global macro outlook we're still fairly comfortable with. But, we haven't seen risk being priced properly for some time. And I just think we're getting back to, a little bit more risk and volatility coming back into markets. Personally, I think it's probably too early to get too bearish just yet. As I said, for where we are in the cycle and where interest rates are, I think that's just getting a little bit ahead of ourselves. However, there's no doubt that there are some worries out there that we need to be cognizant of. Our view, particularly if you look at India, we have had a bit of a sell-off coming through, particularly in the mid-caps as well. So some of those, rising interest rate concerns, et cetera, seems to be beginning to get priced in. But clearly, if the global backdrop does deteriorate significantly, if it does look like there is going to be an escalation of trade issues, that certainly would be negative. And that's something we need to be very cognizant of.
Jonathan, hi there, afternoon. Then there's the problem, of what's been going on with the big banks back home, particularly the PSU banks, with a lot of those scandals unfolding. And the story here just doesn't seem optimistic, no matter who you really speak to. One would be pretty nervous when it comes to approaching the space, given the fact that a lot of these government banks or PSU banks account for nearly 70% as well of all of the lending. How are you looking at this overall story unfolding and what it means for the banking space as a whole? What really is the need of the hour?
Yeah, so I mean, obviously it's come at a very unfortunate time, these scandals that have come out. And, the market, you could argue, when you look at the PSU banks in particular, and even, obviously the large one in the sector is the State Bank, you've seen quite a significant sell-off. These banks now are certainly trading, or particularly State Bank of India, when it's looking at, I think it's about 0.7 times book. to me, there is a valuation argument coming in for that particular counter. But obviously, the more broader worries would probably still focus as a sector on ownership issues, management structures, and focus, lending practices, et cetera, which clearly need sharpening up. And then obviously it's not helped when you get quite a public disagreement between the Reserve Bank and the Finance Ministry about, ultimately who controls these banks and has that full oversight. So it's certainly a negative that we're keeping an eye on, but we would argue a lot of the sort of negativity is probably in the price. I'm not saying we're at a bottom here, but certainly the market has been very quick to derate these stocks since this news started coming out.
So, Jonathan, what's the story then when it comes to India? Do you think that as of now for the year 2018, given that we were accustomed to fairly kind treatment from the equity markets, at least last year there was only one direction that we went, and that was northwards, that this year that the investment case for India is going to be a little bit of trepidation and caution? What's the story?
Well, what we were hoping for really at the beginning of the year, we were building in a derating of India, about a 10% derating in the valuation. And that really this was going to be a year about earnings growth, and therefore any upside from where we started the year would come from earnings. Certainly in the last earnings season, there were certainly green shoots in various segments. Whilst certainly not broad-based, the earnings, according to us anyway, didn't look too bad. So we were still at the beginning of the year building in, it's nothing like we saw last year, but, a market with a bit of upside there. And, based on this earnings recovery. So I think, it is very easy to get ourselves into quite a bearish sort of frame of mind. But has that earnings trajectory now fallen off the path of recovery? And to us, I'm not sure it really has. Yes, you can start worrying about, as you rightly say, the PSU banks with the restrictions that are going on. Will they stop lending? Will the credit cycle, which looked like it was just beginning to recover, now sort of plateau and start reversing? So certainly we need to keep an eye on that. But again, when I look at the macro, the data that has been coming out, it does seem to be apparent that there is a recovery in growth coming through, albeit still quite slow. On that basis, we still do think that there will be upside to earnings. The street clearly has been still revising down numbers. So I'm not quite so bearish at the moment as well. I think when you look at credit markets and the government bond markets, you've seen that rise in interest rates. Policy has also, been tightened incrementally because of that. So I think a lot has been thrown at the market, but I'm personally not as bearish as I get the feel that probably the street has become.
So, Jonathan, now that the market already has given you that 8% odd correction from the top, have you been a buyer in this decline, or are you looking to buy now? And if so, what?
Yeah, absolutely. So I think certainly some of the mid-cap stocks have really gone through a derating in the short term, albeit from pretty punchy valuations not that long ago. Also, I think if you look at some of the metal stocks, particularly, say, for example, Hindalco, if you look at some of the banking stocks, that they have really started coming off. So we're looking at very cautiously looking at actually adding a bit more money back into this market. As I said, it probably feels like there's a little bit further to go. But personally, I'm not sure, unless there's an event that happens globally that could easily push India down further. I think it's not a bad time for long-term investors anyway to be looking at certain counters in the market.
Thanks, Jonathan, for joining us and stating your opinion on emerging markets and India at large.